Alright, welcome back everyone. So today we're going to be focusing on wires. Previously they were named transferwise, but we're going to be focusing on them today as they will be IPOing in July. Now let's just take a step back and understand what wires actually does. And so the main focus of the company is to send money cheaply abroad. Now you can see on the screen we have GBP, and we can change to a whole range of currencies that are provided. Now it's not every currency out there, and so that's one thing to call out, but if you can't find your currency, you can actually request the currency and then they will explore the options available to add to their system. But we can see if we spend £1,000, then there'll be a fee of £3.69. There's other options as well, but there is a fee associated. But most importantly, we have a guaranteed rate within the span of 48 hours, and at the moment it's €1.16. Now this is a lot cheaper than if you use conventional bank systems. The rate in which they use is generally the determining factor in terms of how much money you will receive. And so when it comes to conventional banks, transferwise is a much simpler, a much more cost-worthy option, and we can see the breakdown here that on average it's 8 times cheaper than any of the high street banks out there. Now as we can see, we have wires listing on the IPO. It's going to be happening sometime in July. The expectation is around the first week, but it's not actually being confirmed by the company as of yet. And so what's going to be happening is that there's going to be a direct listing, and so direct listings are generally a lot cheaper to the traditional IPO. The one thing to be aware of is that there's this avoidance of a lockup period. So generally the first 90 or so days, shareholders that already have ownership within their company are unable to sell out within the first 90 or so days. And sometimes that 90-day period can extend all the way to 180 days. What's important is the IPOs, there's a little bit more regulation, a little bit more costly, but it does prevent the price of the share to reduce significantly, or to prevent individuals from making a profit and selling out their positions quickly. But actually this really isn't a concern. So in the past I've always spoken about IPOs not being the ideal time to buy into a company. But the reason why I'm not worried about this direct listing is because we currently have an estimate in terms of the value of the company. So at the moment it's 5 billion or £3.6 billion. That's just because of all the private investment rounds that have taken place and the expectation of what the share is worth at that point in time. And so the number that people expect at the moment that this stock is listed is around the $6 to $7 billion mark. And so already we have disclosures in terms of revenue. That number is 421 million last year. And so with 421 million, that is actually a healthy revenue figure. Now something to be aware is that we are talking about revenue, we're not talking about earnings, so we haven't deducted any of the taxes. Once the stock is listed on the exchange, and after a few months we'll be able to see a full breakdown. But we are dealing with a company that is in profit, and that's not always the case with other types of companies out there, especially in the fintech industry. So a big plus here is that we have a company with positive numbers and they are expanding their business as well. And we can see that the first time that this company turned a profit was 6 years after being founded. So that was back in 2017. So the last 4 or so years, this company has been turning a profit. In addition, the company has been expanding. So they've got offices in the likes of Brussels. They've got their APAC hub in Singapore. And just in terms of the usage of the application itself, they're sending over 1 billion every single month. So it's definitely large transaction quantities spread across the globe. Now I thought I would cover the Financial Times. This is their opinion on the Wise IPO. And so all in all, it's written in a negative limelight. They talk about the Metro Bank, which went through a direct listing in the past. They then go on to reference the likes of Spotify and Slack, who went through a direct listing equivalent in the US. So we can see that these US direct listings have been proven to be more volatile than the more traditional IPOs. Now, if we take a look at the likes of Spotify, for instance, we can see that since they've been listed, the company has actually increased quite substantially. It's valid in that this price has been somewhat volatile, but the price has gone up, and that's all we really care about in the long run. And let's also check out Slack. So since they've listed, they opened back in the $37 mark, somewhat on a downtrend, but since 2021, this stock has really picked up. Regardless of if you invested during the first year or so, you still would have been turning a profit. And so just continuing with the Financial Times, we can see that they don't believe that this stock we'll sit easily with many UK portfolios. They'll then go on to reference Deliveroo. And for those unaware, Deliveroo listed on the stock exchange back in April. Let's just take a look at the price here. So we can see when they first opened, it was at £2.87. At the moment, we're at £2.79. So for sure, the price has gone down and hasn't really broken that initial price. But with some of these IPOs, you have to give it time. When you invest in the beginning, it sometimes doesn't pay off and generally makes more sense to wait. But there's been examples as well. For instance, if we take a look at Zoom, this stock skyrocketed, obviously fueled with the likes of the lockdown and a lot of people using the company. But this is one of the few examples where if you get in early within an IPO, then it really does pay off. Most of the time, you end up losing money. And so going back to Deliveroo, and I've done a video in the past explaining my thoughts here, but I don't actually think this was a failure. I do believe the company has potential to grow a lot more compared to the price that it listed initially. And when we look at the likes of Wise, this is a much more stronger company. They're already turning a profit, and we're dealing with two completely different companies out there. So all I want to say is don't worry about these posts trying to scare you into not investing. I've said in the past that when it comes to IPOs, you should be a little bit more cautious and give it some time for the price to settle. But equally, if it's a solid company out there and you feel comfortable putting some money in, then definitely go ahead and invest into the company. And so once this stock is listed, I'm going to be doing exactly that. My approach is to invest a small amount. And by small, that depends on the individual and how much money you have. But in the range of £100 to £500 is what I consider a small amount. And from there, just monitor the price. If you want to sell out during the early stages, if the price does increase and you expect the price to drop, then go ahead. Equally, for long-term holders, you can average your way in. So if you plan on putting, let's say, £1,000 into this company, perhaps don't put all that money in initially, just in the event that the price does decide to fluctuate. But all in all, put money into companies that you believe in. I'm a big fan of Wise, so it's just a question on what price will the stock be valued at once it opens. These are questions we just have to wait until that day takes place. Now, in the comment section below, let me know how you plan on investing into the company. And equally, if you want to stay away from this company, do provide information below as to your reasons. It's always good to have a healthy debate in the comment sections, so I definitely welcome your comments. Thanks for everyone who's been supporting the channel by subscribing. Sharing the video with friends really helps out as well, so continue to do that. New videos are posted each week, so if anyone's new and landed on this channel for the first time, I focus on anything investing. So thanks for watching everyone, and with that said, I'll catch you in the next one.